Don't fall for this crypto trap. The market's pulling back right now, flashing major warning signs, but I'm not running. I believe there will be an altcoin explosion soon. So in today's show, I break down which ones and why. But before we do, let's set the stage. Headlines are screaming war, tariffs, volatility, and suddenly everyone's asking, why are we dumping? And is it time to buy the dip or run for cover? Trust me, what's happening behind the scenes is a lot bigger than just one red day on the charts. Altcoin ETF summer is heating up. An insane opportunity is not going to stick around. In just weeks, we're about to see Wall Street pour billions of dollars into select altcoins and spot ETFs as they get pushed through at record speed. I'll tell you which ones to keep on your radar. Meanwhile, the inflows are exploding, deadlines are moving up, and the whole game is changing right under your nose. This is the window where conviction gets rewarded, where people who saw early end up changing their lives. Are you gonna get a position before the headlines hit, or are you gonna watch things go vertical from the sidelines? So if you're worried about this dip, then stick with me, because by the end of this video, you'll know exactly how to set yourself up and take full advantage of what's coming. It's wild just how fast things in this market changed. Just yesterday, we had all the ingredients lined up for a major move higher. CPI came in lower than expected, markets were primed for a breakout, and risk appetite was heating up. Remember, nothing goes up in a straight line, and there's always a chance of a black swan event throwing things off track. And that's exactly what happened. Out of nowhere, tensions between Israel and Iran suddenly flared, sparking fears of escalation and sending shockwaves through global markets. And it's not just the headlines. Iran announced plans to open a new uranium enrichment site and ramp up production of highly enriched uranium after the UN nuclear agency officially declared them non-compliant. The UN's board resolution was the first in 20 years, and now upcoming U.S. Iran nuclear talks are suddenly in doubt, with President Trump openly pessimistic about reaching any kind of deal. So what looked like a textbook setup for rally turned into a fresh wave of fear, selling, and volatility. This is why you have to stay nimble, keep your conviction, and understand the bigger trends behind the headlines. In my view, what's happening now is likely just another market scare that will blow over very soon. While the world is glued to fear, what I'm about to talk to you next is what you should be really paying attention to. Let's discuss the current state of the crypto market. Just this past week, over $224 million flooded in digital asset investment products, pushing us to $11 billion in net inflows over the last 7 weeks alone. Just like I've been expecting, Ethereum just hit its strongest run since the U.S. election, pulling in nearly $300 million. That means that 10% of all institutional crypto assets under management are now sitting in ETH. Last week marked the second straight week of outflows for Bitcoin ETFs, but momentum is already shifting. Fresh inflows are picking up, and if the pace continues, Bitcoin ETFs could see over $1 billion added by the end of the week. For the first time, the rotation is obvious. Big money is hunting for what's next. And if you've been following along, you would already be in position. Let's face it, this cycle has been different, and knowing what institutions are eyeing has been more important now than ever. Want proof the cycle is different? Just zoom out on the Bitcoin chart. In every previous cycle, Bitcoin action was dominated by retail FOMO, massive parabolic runs ending in blow-off tops. But look what's happening now. Instead of another parabolic curve, you're seeing a steady upward channel. This is the first true institutional-led cycle. The wild swings are gone, replaced by structured bid that absorbs supply and grinds higher week after week. Let me show you exactly what I'm talking about here. You can see this chart over here from Quinton, and it's just a completely different type of cycle. You can see that in the past bull markets, we see this crazy parabolic run, and now what you're seeing is a structured linear growth rather than parabola. And I do think that we will get a parabola at some point, or maybe just an increased linear line, but there is a controlled structure bid. That mania will likely come because most institutions aren't doing FOMO, and that parabolic bid comes from everybody seeing these gains and piling in and piling in and piling in. That's usually retail behavior. I do think that we're going to get some of that from Wall Street, but this is a completely different market cycle. And this also gives me hope that we're looking to break the traditional 4-year cycle, and this bull run will likely head into and well into 2026, whereas before, if we were still on track for a 4-year cycle, it would end in Q4 of this year. But other things that we talk about in today's video will probably give you the same kind of opinion. So let's get back to it. The ETF floodgates are now wide open. NASDAQ just filed a 19B4 with the SEC to list 21 shares SUI ETF. So even SUI, as a new altcoin, is officially in the game. Bloomberg analysts put the odds of a Solana ETF approval this year at a jaw-dropping 90%. If you watched yesterday's video, you already know the review window just got pushed forward. We could have a brand new SOL ETF in just weeks. And it's not just ETH, SOL, and SUI. The SEC has put XRP, Litecoin, and basket funds on the list. All of them have official review windows, and the entire ETF universe is about to explode with possibilities. We're just weeks away from the SEC laying out the new playing field for crypto ETFs, setting the ground rules for what institutions can buy and how capital can flow into the space for years ahead. I cannot stress how massive this is. Fidelity is already priming their clients. Max Waddington, the head of Fidelity Digital Assets, wrote that they believe Ether will sit alongside Bitcoin in core portfolios once regulatory clarity lands. That's one of the biggest asset managers in the world, straight up saying, get ready, altcoins are about to become Wall Street's new playground. Look, I don't just talk the talk. If you've been watching the channel, you'll know I went big on ETH this week. Let me hit you with a quick refresher on why. I mean, I've held ETH for multi-cycles, but I'm accumulating more this week. I did accumulate more this week. We're seeing 17 straight days of ETH ETF inflows. That's steady institutional demand piling up, and it's making headlines everywhere. Meanwhile, whales have been loading up as well, with over 300,000 ETH scooped up since mid-May. Sentiment is heating up too. The ETH Fear and Greed Index for ETH is sitting in the deep greed zone, and Google searches for Ethereum institutional buying are absolutely ripping right now. But here's the game changer. For the first time since March 2020, Ethereum's dominance just broke the 10% mark, a level that historically triggers a full-blown altcoin rally. Every time ETH pushes above this line, the entire market re-rates what's possible. You can see it right on the dominance chart. If you'd like even more proof, just check yesterday's ETF flows. On June 11th, Ethereum ETFs pulled in a staggering $240 million in net flows, crushing Bitcoin's $164 million on the same day. If that doesn't make you bullish, then I don't know what will. And look at what's happening in the news. Vitalik drops a fresh scaling roadmap. The SEC finally brings clarity on staking. The Ethereum Foundation updates its treasury policy, and regulators are openly fast-tracking ETF rules. Everything is aligning for what might just turn out to be the most hated rally crypto has ever seen. If you guys want to see which ETH ecosystem altcoins I think have the biggest upside in this run, at least for the first part of it, make sure to check out my ETH Gems video after this one. Bottom line, ETH is on fire right now. It's becoming the centerpiece of institutional portfolios. I'm positioned already. The window is still wide open, but they won't be forever. Solana is in the spotlight right now as well. Volume is exploding. On-chain activity keeps setting new records, and every major fund is watching what happens next. True to form, this chain is moving fast, and every headline is another sign the entire market is paying attention. Electric Capital says Solana is capturing more new talent than any other competitor. But here's where it gets crazy. Google searches for Solana ETF are up 4x week over week. Meanwhile, the SEC is now openly fast-tracking Solana ETF filings. They've demanded updates, and they want the in-fund staking details. The window for review is almost up. Bloomberg analysts say there's a 90% chance Solana ETF gets approved this year. 90%. And the window just got pulled forward. Here's the lesson. Solana always gets people talking. Right now, every rally draws in even more eyes. Every ETF rumor keeps interest growing. This kind of momentum speaks for itself. I'm not saying there won't be volatility. There absolutely will be. But when the ETF approval hits and those institutional flows turn on, expect fireworks, my friends. Now let's shine a light on XRP, because This one is a sleeper play that everyone's about to rediscover. For the last year, XRP felt like the kid stuck outside the party. Legal battles, lack of regulatory headlines, and hardly anyone was searching for XRP ETFs on Google. In fact, search interest just hit a multi-month low earlier this month. But here's what most people are missing. The legal storm is finally over. On May 8th, the SEC and Ripple signed their settlement. That's years of regulatory fog gone. And right as the dust clears, the world's biggest ETF issuers, Grayscale, Bitwise, WisdomTree, they're all filing for spot XRP ETFs, with the official SEC review clock ticking toward a hard October 20th deadline. Bitwise CIO Matt Hogan, a friend of the channel, even said at Consensus, spot XRP is a logical next step after ETH. But here's the opportunity right under retail's noses. The TradFi rails are starting to build right on top of XRP. Ondo Finance just launched tokenized U.S. treasuries on the XRP ledger. That's real-world money flowing through this chain. Exactly the kind of fundamental adoption Wall Street looks for before they press that buy button. Look, flows into XRP products have been muted lately, but that's textbook setup for an entry. Nobody cares until everyone suddenly does, all at once. As soon as the SEC clock runs out and that approval window opens, don't be surprised if you see a stampede. Okay, let's talk about XRP for a second. Am I the most bullish on XRP as a product? No, not really. Do I think that the utility for XRP is getting cannibalized by the Ripple USD token? Yes, I do. I made a video on that. You guys can check it out. I'll link it in the description below. But do I think that if you're in this market to make money, XRP could be a very good play for the next 6 to 12 months? Yes, absolutely. Why? Because in this market that's waking up in America, my cousin at Christmas last year, she's never bought any crypto. She's not really into investing very much. But the first one that she decided to buy was $50 worth of XRP. Shout out to you, Franny. And I mean, that says a lot. XRP is great at marketing. They've got America on lock. The ETF is coming and they're being invited to the White House. And the price hasn't really moved in a while. I think it's headed much, much higher. I don't have a huge bag of XRP, but after doing some research and looking into this, I do think I probably will pick some up and add it to the portfolio. Bottom line, XRP has always gotten plenty of retail attention, but now it's getting institutional attention and real world adoption also. And for the first time in years, it's got a clear path to the main stage. Let's zoom out for a second, because while everyone's glued to ETF headlines, something just as big is happening on the infrastructure front. We're watching the mainstream financial world rebuild itself with crypto foundations. Payments giant Stripe just snapped up crypto wallet provider Privy, the same team that powers seamless logins for projects like OpenSea and Blackbird. They plan to make onboarding into crypto feel as smooth as opening an email. And this comes on the heels of Stripe's stablecoin expansion earlier this year. Stripe has skin in the game, and that's massive. Big banks are racing in too. Societe Generale just announced a dollar-pegged stablecoin, making them one of the first major European banks to make the jump on-chain. Bank of America is building a stablecoin of their own, both in-house and with partners. To be honest, I'm not surprised though. Stablecoin growth is booming. The total market cap just hit a record $228 billion in June, up $33 billion or 17% in 2025 alone. Stablecoins are now powering payments, DeFi, and everyday transactions, all accelerated by a clear U.S. regulation under Trump. Every spike on this chart is a fresh injection of capital ready to move at a moment's notice. And to top it off, even the U.S. Treasury is working behind the scenes. They just pulled off a historic $10 billion debt buyback, the biggest ever. Now, some folks call this stealth QE, but let's get this straight. It's not the Fed printing fresh money. The Treasury can't create cash out of thin air. But what they're doing is swapping out old stale bonds for brand new liquid ones, borrowing at one window and buying back at another. It's kind of like changing the oil in your car. The engine runs smoother, but you're not adding more fuel. It doesn't flood the system with new dollars, but it does make it a lot easier for big money to move when the next cycle kicks in. When the government's this focused on greasing the financial rails, you know things are about to get heated. This is the TradFi moment, where traditional finance stops fighting crypto and just starts copying it. It's not about banks versus crypto anymore. It's about which rails move the fastest, the cheapest, and the farthest. The institutions that move first will shape what the next decade looks like. The rest, they're all playing catch up. And if you're waiting for mass adoption, just look around. It's already happening, and it's starting at the very top. Let's talk about the highest level of conviction. This is where the entire country steps in and makes moves of their own. Ukraine just dropped a bill that would allow its central bank to hold Bitcoin and crypto as an official national reserve. Are you listening? You heard that right. A major European country openly moving to put crypto on its sovereign balance sheet. I'll hold back my comments on that one. Meanwhile, the macro pressure in the US has just reached a boiling point. Tariff revenue just soared to a record $22.2 billion in May. And Commerce Secretary Howard Lutnick said, so many new trade deals are coming. Just listen to this.
That's what we're working on. And you're going to see deal after deal. That's going to start coming next week and the week after and the week after. We've got lots of them in the hopper. We just want to make sure they're the best deal we possibly can make. We don't want to rush. And Donald Trump is never going to accept a rush. He only accepts the best from us. And we're going to give it to him.
The pressure is on to monetize and modernize everything that moves, including crypto rails. But even with all those new deals and tariff revenue, it seems impossible to get ahead of interest payments on the US debt. At this month alone, hit $92 billion. That's one out of every $4 the government collected instantly gone to interest. And the deficit, and for May, $317 billion. Washington's running out of time and options. Meanwhile, in the US, things are moving faster than anyone expected. The Clarity and Genius Act, landmark crypto market structure bills, just blasted through a marathon committee session with rare bipartisan support. Crypto should not be partisan, right? It should be bipartisan or apolitical. They're heading to a full White House vote, and lawmakers want to merge them into one giant policy package, targeting President Trump's August deadline for a comprehensive crypto law. Here's the reality. Institutions are obsessed with regulatory clarity, and right now, the US, after years of dragging its feet, is racing to give it to them, just as the capital is lining up to move. Step back for a second and look at the global backdrop. The macro setup right now is a dream scenario for risk assets, and especially for crypto. First, the US dollar index just cracked after holding the line for nearly a decade. The Dixie recently broke major support at 100 and is now bleeding lower, heading right back to the zone we saw just before the 2021 crypto bull run. A weak dollar means risk on, back on the menu. And circling back to why Bitcoin and crypto pulled back today, it's all about uranium, oil in the Middle East headlines. Crude oil just closed above its 100-day moving average for the first time in over 2 months, surging nearly 5% on fears that Israel, with US support, could launch a major operation against Iran. Prices touched $69 a barrel. Institutions pay attention to these geopolitical chess moves because they ripple straight into markets. Some say it's all theater, a negotiation tactic, another taco trade. But the market won't wait for the dust to settle. Trump is about to set new unilateral tariffs. Letters go out to trading partners in 1 or 2 weeks with a July 9th deadline. Most countries are at risk for higher duties except the UK and China, where deals or truces exist. His team is still negotiating with India, Japan, South Korea, and the EU. Big trade moves are possible, and market volatility is coming fast. And this is exactly where narratives shake out the weak hands. Arthur Hayes just dropped it perfectly. Don't get shook. Second, rate cuts are about to get political. President Trump is now openly calling for 1 full point cut on the Fed after the latest CPI print. And macro legend Paul Tudor Jones says Trump will pick up an uber dovish Fed chair to take the seat in 2026, meaning a full pivot to loose monetary policy. That's more liquidity, more fuel, more risk appetite. All bullish for crypto and especially altcoins. And Jones isn't mincing his words about how to play it. Just listen to this.
But it would be some combination of probably gold, vol adjusted, Bitcoin, gold, stocks. That's probably your best portfolio to fight inflation.
When a guy with a decade-long record of calling every major macro move puts Bitcoin at the top of his playbook, you know the world's heavy hitters are watching and moving. On top of that, trade war headlines, the same ones that spooked markets all year, are finally fading. Trump just announced and finalized a deal with China, tariffs locked in and both sides stepping back from the brink. The uncertainty headlines are now off the table. Put it all together, weak dollar, dovish Fed, global policy breakthroughs, and record flows, and it's hard to imagine a better green light for this altcoin ETF summer. Here's the truth. Markets are driven by narratives, and right now, the altcoin ETF summer story is taking over because narratives like ETF approvals, real regulatory clarity, and a global macro tailwind create the next wave of inflows. In crypto, reflexivity is the name of the game. Prices go up, new buyers rush in, and suddenly the fundamentals everyone doubted start to flip bullish. Trade war headlines have resurfaced today, but all the old excuses, lawsuits, policy deadlock, and inflation are already priced out of this market. If you're watching this, you guys are early. This is the chance most people only recognize in hindsight. Don't let it be you. Get ahead of the narrative and position yourself while the crowd is still looking the other way. If you guys got value from this video, do me a favor, destroy that like button, hit subscribe if you're not already, and share this episode with someone who still thinks ETFs are just about Bitcoin. Until next time, stay sharp, my friends, stack sats, and I'll see you guys in the next one. And if you want to know why I think ETH is up next, check out this video if you haven't seen it. It's even better than this one. See ya.